Welcome back to another episode of the Wilson Weekly with the lovely Dr. Andrew
Ah.
Wilson again.
Lovely. Very nice. All right, all good, and good to be back here. This will be our last episode for August, which means it's our last episode for winter. So bye-bye winter and hello spring next week. And as we'll discuss at the end of the podcast today, we're certainly seeing some very strong signs of the spring selling season already in our auction markets, our weekend auction markets. We'll have a big show next week. Every week's a big show because we'll have the August house and unit prices hot off the press, latest with the first. So we'll be able to discuss that. But we've got some very interesting news today. We've got a bit of a catch up with some economic data on wages and earnings, which we'll go through, which of course is important when we're discussing the housing market because it's not just about affordability, what you're earning, but it's also about the prognostications of the Reserve Bank. The Reserve Bank's been concerned that wages growth has been high, which is what we would expect in a strong labour market. And that employers, haven't had the usual capacity to cover higher wages with productivity gains, which is what we sort of normally do in our labour market. So it sort of means that if you can't cover your wage rise from your employee with productivity gains, that means, they're producing more, therefore they can be paid more. You have to cover it with higher prices. And of course, that means inflation. So that's the concern of the Reserve Bank. So we'll have a look at what the latest data, it's a little backward looking, tells us about incomes. But of course, that's important also, in a high inflation or higher inflation environment to tell us, what our sort of standard of living is. So we'll have a look at that. But really hot off the press today, literally just released, has been the inflation data for July. And of course, the focus is on interest rates when we particularly talk about the housing market and the cycle that we've been going through for the last couple of years since interest rates started to increase. And of course, before that, we had zero interest rates, official rates through the COVID period. So it's been a bit of a roller coaster, and we're looking for some guidance where Australia's interest rates will head. We're certainly getting a clearer picture out of the US that they may cut interest rates now, but the position is different in the US to Australia. So we shouldn't just sort of say, okay, if the US cut rates, that'll mean Australia will cut rates. That's not the case because not only is our inflation rate considerably higher than the US inflation rate, but our interest rates are also lower. So it's sort of we're the other way around. So just because they cut, it doesn't mean that because our rates are actually lower, our interest rates, doesn't mean it has a relationship to what our inflation is doing. Anyway, I'm waffling on a bit now. But what we want to do is look at what the latest data tells us on inflation. And it's actually some good news with the latest inflation rate. So let's get started, shall we? We'll get that slide deck up and running. There it is. So My Housing Market is our consultancy brand. We work closely, of course, with the Infinity Group, which brings you this podcast every week. We are all about the current state and future prospects of housing markets, particular emphasis on current state. We want to know what's happening here and now, and that's what we're doing today. We're bringing out all the current data, and it's not just specific house price or housing market data such as house prices and rents, etc. It's all about the drivers of the housing market in terms of the economic factors and of course, particularly interest rates, which are important for our housing market activity because, of course, most of us take a mortgage when we purchase property. So we're beholden to what's happening up or down with interest rates. So let's get started. And it is the week ending August 28th. See you later, winter. Hello, spring next week. So
Goodbye, winter.
Goodbye, winter. Thankfully, it's been interesting because it's probably been a mildish winter everywhere except Sydney, believe it or not, which has had a pretty cold winter. So bye-bye winter, sort of. I suppose a lot of people are looking forward to a bit more sunshine. we're getting that in spades really now. We've had a big start to I guess notionally spring, even though we've got a week to go, with warmer temperatures, particularly Sydney and Brisbane, Gold Coast, etc., and a little warmer in Melbourne. But so we'll say goodbye to winter. This is our last podcast for winter, and let's see what the data brings us today. As I mentioned, latest inflation data, hot off the press from the ABS. We're also going to discuss the latest wages and weekly earnings, and as usual, finish off with the latest weekend auction results. So here we go. Drum roll. Big headline. Inflation lower again. So we're now starting to see a reversal in the headline inflation rate, which is now again trending lower. Now the headline inflation rate sort of covers everything, but we have another inflation rate, which is called the underlying inflation rate, which takes out the volatile elements, those seasonal things such as food and fuel, which can go up and down, periodically, and that can give us that sort of more volatile environment. So the underlying inflation rate takes out the volatile elements, and that's the rate that the Reserve Bank uses as their benchmark. So it's not the headline rate; it's the underlying rate that the Reserve Bank focuses on. And the model for the Reserve Bank is that they want to get the underlying rate between 2 and 3%. That's the target, 2 and 3%. And the Reserve Bank governor has told us that they want that to be consistently between 2 and 3%. So it's not just sort of like a one-off. We need to see a sustained period of inflation in that middle band. Now, we've been struggling to do that for some time for various reasons. But maybe starting to look a little better. So let's have a look at the results over July. So headline inflation has fallen again, down to 3.7% over June, and that follows, that should be 3.7% over June, from 3.8% over July over June. And the underlying rate, we'll just move that back a bit, the underlying rate has fallen to 3.7% from the June rate of 4.1%. So let's have a look at what the contributors to the change in the headline rate was, and that was housing. So we're seeing some improvement now in the costs of housing. So this is the change over a year, and that's what we measure inflation as, the change over a year. So housing was higher by 4% over the year, but that has been falling. The previous, over June, housing costs are up by 5.5%. So that's added to the improvement. Food was up a bit higher, up by 3.8%, compared to 3.3% increase over the year to July. So we've had an improvement in housing costs, which of course is good news from our perspective in terms of the housing market, and that reflects factors such as rents and house building costs. But food just ticked up a little bit. But the big contributor, which has really pushed our inflation rate down, is fuel. So petrol costs, fuel costs overall up by 3.4% over the year, but that's a big drop from 6.6% increase over June. So the July increase of 3.4%, a sharp improvement compared to 6.6% over the previous month. And the month before that, just as a reminder, May, we had fuel costs up by 9.9% over the year. So we've been discussing at length here the relationship between fuel costs and the inflation rate, and that we needed to keep a really close weather eye on the price of oil. And that's panning out now in the positives, because oil prices are falling, petrol prices are falling, and that is pushing down our inflation rate. So that we've still got to keep an eye on here, because there's a lot of shenanigans going on in the Middle East at the moment. That could impede oil supplies. Again, that could push the price of oil upwards, which would have an impact on the inflation rate. But we can quite clearly see there that the improvement in the inflation rate has been a result of improvement in oil, as well as an improvement in housing. And they've been the two main drivers of inflation through this period. Housing with higher rents, and high house building costs and high costs of fuel. So some better news there. Now, even though we're down at underlying rate is 3.7%, which is a good result, we're still ahead of that target of 2 to 3%. But we're certainly now moving in the right direction. Another couple of months of these results we'll certainly start to see the discussion we've had about perhaps higher interest rates. And the Reserve Bank has clearly said that haven't ruled higher rates out because of rising inflation recently. We may start to see that receding as a possibility. And then, of course, that brings us, if inflation continues to fall, within the realms of discussing perhaps an interest rate cut. Although I don't think, there's a lot of water to go under the bridge before we start talking about that. And we need to see a couple more months of improvement with the inflation rate. But hey, let's not be naysayers here. It's a good result going forward. It's heading in the right direction, both for headline inflation and underlying inflation. And we're starting to see, at least early days, that discussion of the possibility of higher interest rates now receding. So let's hope that continues onwards, because none of us really want higher interest rates. Well, it's good news. It's a positive news. We can hang our hat on this one. Of course, likely we'll see the media and the usual clickbaiters getting onto this means lower interest rates. But the Reserve Bank has said quite clearly that they are looking at the quarterly data sets in terms of their interest rate decisions. The next quarterly data set for inflation comes out in the middle of October. So they'll be waiting to see the results there. And I think even if it was a good one like we've seen here, which we could maybe extrapolate that will occur, I don't think it's good enough for them to say, okay, one swallow makes a summer, and that we're going to cut interest rates because of that. And of course, the next decision for the Reserve Bank following the release of the quarterly CPI data will be the Melbourne Cup Day decision. I think it's still on Melbourne Cup Day in November, which is basically the last decision of the year. So I still think that we're a long way logically behind, even with an improvement in inflation, discussing an interest rate cut. And that's just clickbait if you see those headlines floating around. Because like I said, even though we've had a good result here, underlying inflation is at 3.7% still. It's still above the target range. And the Reserve Bank has said they really want to see a consistent period of inflation within the target range between 2 and 3%. And that would be in the middle of the target range, because they don't want to be declaring victory. And then all of a sudden, as I said, exposure to oil, whatever, sees inflation ticking up again, and they may be forced to raise rates. And as I said, just because the US may cut rates in September doesn't mean that we will follow, because our official rates are well below the US official rates, but our inflation rate is well above the US inflation rate. So we're just not matching really, even though that will get a lot of headlines if that cut happens. And those headlines will also be, blathering on about how we will follow suit with the US. So anyway, this is a good news story today in terms of inflation. We can see there when we look at the chart for underlying inflation that the trend, following an upwards trend, we've just now gone downwards, which is what we want, and hopefully that will now be sustained. But as I said, we need to keep a close eye on oil. But good news that housing costs have receded this month. And we're also, as if you remember our latest rent report, which was for July, actually did show some improvement in the rental market in terms of higher vacancy rates and not as strong growth in rent. So some early signs there, some rebalancing in the rental market, but maybe that was seasonal factors, the winter factors driving that. But we have been saying that there will be sociological adjustments or social adjustments made to the very tough rental market, with people making differential choices for their accommodation because they can't afford what they would particularly like to have in terms of the roof over their heads. But you can see those comparisons there. US underlying inflation is just 2.3%, whereas we're at 3.7%. but the US interest rate is 5.5. We're 4.35%. So even if the US cut, they're still going to be a long way ahead of us, even with a much lower headline inflation rate. Okay, so tick for inflation, reduction in headline inflation, and a reduction, importantly, in underlying inflation. So with a bit of luck, the chat about higher interest rates will move sideways, and we just need to wait for the other factors to continue to improve, as I said, particularly the price of oil and particularly housing costs. So let's have a look just quickly at wages growth. This is the latest data we've had. It is a little backward looking, but this is the wage index from the ABS. It was up by 0.7% over the June quarter, which is the latest data, which is a little bit less than the 0.8% reported over the March quarter. Still a strong result. And look, we're happy to see that in a sense, because with high inflation, we've seen real wages dropping, and real wages are the difference between what you're getting paid and what you're having to pay in terms of prices. So we're now starting to see some potential that real wages are growing again. So households are making a profit. Annual wages were up by 4.1%, which was the same over the June quarter, which was the same over March. It's still a very big number. And when we look at the chart, we'll see that it's as strong as we've seen in periods of previous robust economic growth, such as the mining booms. Interesting that the private sector was out matched by the public sector. So public sector wages actually increased by 0.9%. The private sector up by 0.7%. So, government agencies are paying lots more compared to the private sector for their employees. So they'd be sort of happy. I'm sure the Reserve Bank would be happy to see that. But we've got to understand that, as I mentioned before, if higher wages, which we still have, strong wages growth, starts working its way into higher prices, because we don't get the productivity growth supporting for employers to support higher wages, they'll have to put up their prices. So it's not great news in terms of the inflation outlook. But again, this is a little backward looking, and it's the 3 months to June. And we're still nearly into September now. So, but nonetheless, it still reflects a strong economy. Wages are growing, and that means real wages are growing too when we compare that to where the inflation rate. And most states are still reporting, even though jobless rates have increased a little bit, they're still reasonably low. So that leverage on strong labour markets and higher wages is still there going forward. So you can see there the wages growth, 4.1% over the year. If we go back to the mining boom of 2010 to 2012, wages peaked then at 3.8%. So we're tracking higher than when that was a very strong period of growth and higher interest rates, and not far below the big wages growth, the record wages growth we saw during that period up to 2007 with that great mining boom we had then. So still strong wages growth historically. No surprise that when we look at the other factors of income, such as average weekly earnings, this is a bit of a backdated measure from the ABS. It's taken 6 monthly, and the latest data was to the 6 months to May, so from November to May, which was released just a couple of weeks ago. It shows Queensland, the big mover, with average weekly earnings up by 6.1% over the year. So that's a big increase, remembering that we saw the wage index up by 4.1% nationally. So we've got average weekly earnings, adult weekly earnings, up by 6.1%. So that's a big rise for Queensland against the highest of all the states. But when we look at what the actual average weekly earnings are, wow, look at Western Australia there. Average weekly earnings above $2,000 a week in Western Australia. No wonder that housing market's booming in Perth, because not only does it have significantly lower prices, median house prices compared to the other capitals, the major capitals, but it also has significantly higher wages. So you can afford to pay more, and that means affordability is quite strong in Western Australia, and that's part of what's driving that Perth housing market going forward. So let's finish off with the latest weekend auction results. we've done to death the end of winter. It is the end of winter, and here comes spring. And again, that's the real sign. And look, as I said at the beginning, we're all about real-time insights into the housing market. We want people out there who are making decisions on property to be making it based on what's happening here and now in the market, rather than sort of 6 monthly six monthly house prices or unit price models. This is about what's happening on the weekend in our auction markets, and it's a great forward indicator for activity on the ground generally. And we know that because we see clearance rates and auction clearance rates and house prices track the same directions. That's why we cover it. So here comes spring. The portents for that were again strong last weekend. We had a big rise in listings, particularly in Melbourne and Sydney, which are the spring markets per se, generally outperforming the others because they have a much stronger prestige market, which tends to activate in the spring months. But we had a big rise in listings, and clearance rates were a little bit lower in some of the capitals. But when we translate the higher listings and the marginally lower clearance rates, we still had a big rise in actual auction sales. So the sales, even though the clearance rates were a little lower, the number of sales was actually quite high. It was higher again. And this, of course, just means that buyers are out there, sellers are out there, and markets are turning over. So we can expect that to certainly continue, particularly in Sydney and Melbourne, over the weekends moving into spring, and for buyers to come out as well. So the buyer depth will be tested with these higher numbers of properties, but so coming into the marketplace. But that's the nature of the game. So markets are still quite robust, and as we said, the economic environment is still quite strong. And we'll look at what's happening with house prices next week. So this is the data. Sydney 859 auctions last weekend. That was a reasonable rise from the previous weekend, 809 auctions. Sydney actually had a higher clearance rate. Sydney's been a very sturdy, robust market, even with higher listing numbers. 72.8% result. That is still a result in favour of sellers. That means that over 7 out of 10 of all properties that go under the hammer on the Saturday are being sold. So that's a good rate if you're a seller. And that's why we're continuing to see underlying prices growth in Sydney. As I said, higher than the weekend before for both auction numbers and the clearance rate. And auction numbers well ahead, and that's a trend we've seen for most of the year, that auction numbers have been well ahead of the same period last year, which they were in Sydney last weekend. But the clearance rate getting closer to where it was a year ago. We've got to understand our clearance rates were in boom mode a year ago. Very strong revival market a year ago in most of our capital city markets. And that's why clearance rates are tracking higher currently than where they were a year ago, because we had fewer properties in the market, and that meant a higher clearance rate, fewer choices for buyers. But Melbourne, big jump in auctions, nearly 100 extra auctions in Melbourne last Saturday compared to the Saturday before. Clearance rates not too far away compared to the weekend before. I think that's a good result for what's been quite a steady Melbourne market, not with the strength of some of the other capitals, but certainly holding in the mid-60s, that Melbourne market. And it's a patchy market, Melbourne. We've described that. The budget-priced and mid-price sections of the Melbourne market are still finding buyers with some prices growth, but it's really the high end of the market, the prestige market, inner east, inner south, and inner city suburbs that have been dragging the chain in that Melbourne market really for a couple of years now. But spring is the time of the year for those price points to activate. And we did start to see some early signs of that on the weekend with higher clearance rates in the inner east and the inner south, just pointing to what we would expect normally to see an improvement in that part of the market in the spring months. So maybe that'll be the key that pulls that Melbourne market back up over 70% in terms of clearance rates. The clearance rates, again, lower than a year ago in Melbourne. Auction numbers higher than a year ago, as we're seeing mostly with all our capitals. But clearance rates actually not too far away now from where they were a year ago in Melbourne. But generally a reasonable result again there for the Melbourne market. Brisbane auction numbers down a little bit, as we know with Brisbane, those 50% clearance rates are what we typically expect in Brisbane. They have a different model in terms of auction marketing to the other capitals. So anything over 50% can signal prices growth. But again, its clearance rates are well below the record levels that were being reported in that Brisbane auction market a year ago. We'd never seen auction clearance rates in the 70s and 80s in Brisbane because, that, as I said, it's not their sort of culture. But so obviously a difference there, and we were seeing remarkable prices growth because every property that was on the market was being snapped up before you could say whatever. But still a good result there for Brisbane. We know prices are still growing in Brisbane. Adelaide tracked down a little bit. We've sort of moved away from those crazy 80 to 90% results of a year ago in Adelaide, but still a good result there for sellers in Adelaide generally. And Canberra, a little bit of a disappointment. We've been calling a revival in that Canberra market over the last month or so. It's been a bit up and down. Canberra has been recorded a couple of 60%, a number of 60% clearance rates over the past month or two, but it has fallen back periodically, and it did last weekend, a 50% clearance rate with fewer auction numbers and lower than, but for both auction numbers and clearance rates compared to a year ago. So still a little bit of volatility in that Canberra market after having perhaps teased us a little bit with some more positive results over recent weekends. But we'll have to keep an eye on the Canberra market through that spring selling season to see if it makes its revival. There's the Sydney trend so far over August, still above 70%, but it's really tracked above 70% for most of the past year. So a seller's market there. The Melbourne market actually higher than it's been for around about 6 months in terms of its clearance rate. So, still some activity in that Melbourne market. Not all doom and gloom. And as I said, it's certainly a fractured market in a sense in terms of differential activity in particular areas. But maybe that spring market will see a revival in those areas which have been underperforming and start to pull that clearance rate up above 70%. Brisbane, as we said, back to its sort of normal position of around 50 plus, but certainly lower than a year ago when it was a boom time market. Adelaide also weakened compared to those crazy results of a year ago, but still very much a seller's market in Adelaide, and prices are continuing to rise there. And Canberra just started to tease upwards towards 60%, but fell away last weekend, which has pulled it back down under 60%. So we're still keeping a close eye on that Canberra market. If you want to get those auction clearance rates, you can head over to my LinkedIn channel, Doc Andrew Wilson at LinkedIn, every Saturday at around about 6:30. You can get the headline results, which gives you the latest listings and clearance rates and compares it to the previous weekend and the same weekend last year. And you can also get the full national report on Sundays, which gives a regional breakdown for Melbourne and Sydney, as well as the top 10 sales under the hammer for all the capital cities on that Saturday. If you've missed out on that one, there is a QR code which will take you to the latest national weekend auction market report. So you take a pic of that and it'll give you a link to a PDF file to the weekend auction market. We finish off by our plug for our suburb data app, brought to you by Infinity and My Housing Market. You can get a link to that on the QR code there. You need to get a password from Infinity to access the app, which is a fantastic little resource there. Anybody interested in the housing market, it covers in real time asking prices and asking rents, so you can understand what the market's feeling about every suburb in Australia that has data is covered there. You can filter it for price or rent. You can filter it for the capital city region or the non-capital city region of each state. Filter it for the suburb. We've got black down here as the screenshot. You can filter it for the type of property, house, unit, townhouse, and also the number of beds. And there you go. There's a result on that screenshot. Not only the median asking price there, also the low and the high asking price, and the number of properties for sale. And we also have exactly the same thing for the rental market. So if you're a landlord or a tenant, you can figure out what the market's asking at, or you can see what the market is asking at the moment in terms of your particular suburb. Next week, August house and unit prices, July retail sales, and the latest weekend auction results. If you want to get a copy of today's podcast in slide deck view, you can get a copy of that there at QR code. So a bit tedious today, perhaps, in terms of economics, but I think it's a very important data going forward, and it will change the narrative, certainly in the shorter term, as to the direction of interest rates, particularly takes pressure off what was obviously concern from the Reserve Bank that they may have to push up rates. But hey, we're not out of the woods yet. There's still some, some uncertainty out there, but we're heading in the right direction, no doubt about that. All good?
One step at a time, Doc.
Yeah. Well, we'll have a good one next week when we see what house prices have done over August. So latest with the latest data. So look forward to that. And I'm counting the hours down until we meet again.
Thank you so much for your time, Doc. Appreciate it. And I'll see you in Melbourne.
Yeah, that's right. Great old Melbourne. Good on you guys. See you later.
Thank you. Bye.
Yep.